by the time it hits the consumer, it's trickled down. Yellen admits inflation is about to surge, but don't worry. It will be a plus for society's point of view. What the hell does that mean? Printing money like it's their job, doing quantitative easing like it's their job, racking up budget deficit like it's their job. So far, all these people are very good at their jobs. What inflation, might you ask? I'm just gonna wave my magic wand and there is no inflation. Oh, who is talking about inflation? Why would there ever be inflation? That was what the Fed has been telling us for months. That's what Janet Yellen has been telling us for months. Don't worry about inflation. There's no inflation. On the show, we have said that is complete bogus. Inflation is coming. I have given you multiple examples about how and why inflation is coming. We've had the chief economist of Lending Tree on the show. He didn't agree with me about inflation, but he did agree with me about asset price inflation, which is basically investment assets, so stocks, equities. And we talked a lot about our private, tech company valuations also seeing inflation. Now, a little update on that. So you're absolutely seeing real inflation, like in everyday consumer goods inflation, whether or not the federal government and the Fed want to admit it. And we're going to talk more about that in a second. But let me talk to you about tech company inflation. So Applico released a report end of last year saying, hey, we're seeing inflation with late stage VC investments, right? So later stage, kind of growth stage tech companies, right? And we talked a lot about why we saw that coming about. Well, fast forward to 2020, we're now almost halfway through 2021, and basically it's gotten a lot worse. Not only has it spread even deeper inflation into late stage, it is now spread into early stage, going down even to angel and seed rounds. I mean, look at this. You're seeing inflation in angel and seed rounds having record-breaking both valuations and dollars being put into early stage companies. See this here, early stage VC. Look at that. Lines go up. I'm going to talk more about why this is happening in a second after I show you what's happening. Now let's look at the late stage. Look at late stage. Oh, yikes. Look at that. So we caught it, right? So our report was looking at, this bit. The second half of 2020, we were saying, yeah, we see inflation in the late stage. Look at what just happened. Look at the line going basically straight up. This is what every startup wants to see in their growth chart, right? This is the proverbial hockey stick, right? Boom. Yeah, but I guess every startup also wants to see this with inflations and in valuation and dollars going into late stage VC rounds. But this chart is specifically looking at late stage VC pre-money valuations by quarter. So this is the Q1 2021 average. Now, what does this mean? What this means and why this is happening is we saw, Applico reported on this, we saw the beginnings of late stage inflation and valuation second half of 2020. Now, and what we attributed that to was a lot of the hedge fund, really kind of like growth stage, pseudo PE kind of funds were investing in a flight to safety. They were investing in late stage tech companies that were bigger. They could put their money in. It was safer. We were still kind of in the throes of COVID. We were also in the middle of, kind of SPAC mania was just getting going, right? So, hey, let me give you some money. Hey, go SPAC it. And then I get liquidity on the public market. Now what's happened in Q1 is that ocean has been boiled. That ocean is actually boiling. The late stage VCs have gotten crammed down because now you have these bigger funds that are used to writing bigger checks going to the later stage kind of growth stage tech companies saying, hey, let me put money in. I'll give you more money and I'll give you a higher valuation. So take my money. Don't take the late stage VC's money, take my money. And the founder is saying, okay, yeah, let's do that. And now you have all the late stage VCs are getting effectively crammed down. And then the late stage VCs are doing deals in the late stage, but now they're also going into the early stage. So now you have the early stage investors that are doing Series A and Series B. Now they've gotten crammed down, and now they're going into the seed. Oh, so you see how this whole thing cascades down, right? So it started, and it takes time. That's why, to the point on inflation, by the time it hits the consumer, it's trickled down, right? It doesn't happen overnight. That's why I've given you stories about our clients, many of whom are in the B2B distribution world anonymously, but saying that they are seeing that inflation in their business, right? So if you think about the supply chain, it goes from manufacturer to B2B distributor to, then retail stores and the consumer. It's a couple steps above in the supply chain, which means that by the time it hits the consumer, there's a little bit more time. But all that stuff gets passed down. It all cascades down. Whether you're talking about late stage inflation in private tech companies down to early stage, which is what we're seeing now, or you're talking about inflation from manufacturers and suppliers going to B2B distributors and eventually making their way to the consumer. It is all happening. So that means that when you are supposed to trust the powers that be, who were saying that inflation is not here, it's not a thing, now they're kind of changing their tune. Like this. Yellen admits inflation is about to surge, but don't worry, it will be a plus for society's point of view. What the hell does that mean? Increased inflation could ultimately be a net positive for the U.S. economy, and large government spending won't overheat the economy. If Janet Yellen was Pinocchio, her nose would be through that microphone. Like the microphone would be off the stage, on the floor. Like you actually wouldn't even be able to hear her anymore because she would have disabled the mic because her nose would be so long. It's just not true. It's just not true. Now what these experts, right, will tell you is that, inflation might reach 5%, but then it's gonna taper down. Inflation's gonna come down, right? Because we had a little surge because the economy is opening back up again, but inflation's going to come back down. I think they said inflation is at like 5% now. U.S. inflation is highest in 13 years as prices surge 5%. It's not coming back down. Nothing is being done to fix this. My clients, they can't hire people. The labor markets are a mess. You can't hire people anymore. You just got all the wages extended until September. Unemployment wages. All of this, right? It all cascades down. Nothing is being fixed at the source, right? All the stuff that's happening at the source, it's not like, now inflation has finally hit the consumer. 5%? You know that the Federal Reserve is supposed to have an inflation target of 3%. Like 5, we went from basically, no inflation to 5%. And now it's magically going to come back down. It doesn't work this way. And I see it at the source, and the source is not getting fixed. The source is going crazy because they can't get labor. Prices are going up for commodities on basically every category. And the source is saying, this isn't getting fixed. And I am only seeing more inflation, which means this 5% number is not going down. No one is doing anything to actually fix this problem. It's not going to get fixed. Boom, look at this. Yikes. No bueno. Now, why is inflation bad? Inflation is bad because the Federal Reserve's objective, like stated objective, their raison d'etre is to control inflation. And they have a target of 3% inflation. So eventually the bubble is going to pop here in the sense that the Fed and the Federal Reserve are printing money like it's their job. They are doing quantitative easing like it's their job. They are racking up a fiscal budget deficit like it's their job. And man, so far, all these people are very good at their jobs. And eventually the thing that makes the music stop is inflation, because effectively, you've got a decision to make, right? I either have to stop juicing the money supply to control inflation, or I don't, And then inflation continues to get even worse. And once inflation reaches a tipping point, you get hyperinflation. And it just, you can't put the genie back in the box, essentially. That's a really, really bad scenario. You know, if you listen to your parents like the 70s, yeah, inflation was crazy. Yeah, that's hyperinflation. And then you have like stagnation where you have flat GDP growth, or you have recession, depression, negative GDP growth. And oh, yeah, hyperinflation, recession, that is the perfect storm. That is what we had Jim Rickards on the show to talk exactly about this exact thing, which is why he said to put, and he talks about how to invest your money differently to prepare for these exact events. Buckle up, go watch some of our videos, go watch the Jim Rickards video. It is happening and no one is doing anything to fix it. And who knows? And if the Fed does decide to stop quantitative easing, what you're going to see in the stock market is going to tank. Stock market is going to crash. And a whole bunch of other things are then going to start to come apart. So what do? You keep giving out free money and just let the music keep playing, knowing that it's going to be a lot worse? Go look at Japan. Go look at Japan in the late 80s. Great documentary. I talked about it earlier on the show. I think Princes of the Yen was the documentary. Yep, Princes of the Yen. It's on YouTube. It's free. Go watch that thing right now.
Hi, I'm Alex. Thanks for watching the show. Make sure to hit that subscribe button, but even better, make sure to follow us on Odyssey, follow us on Rumble, and text us 203-646-5159. Text the word Monopoly. You'll be subscribed. You'll get updates about when we're going live, our latest videos, and we'll send you even a little goodie bag. And in the event that we all get banned from big tech, we'll still be connected.